let's look at Solana. There's definitely some demand coming around the $80 level, followed by a test, and now that the overall supply is diminished, we see an attempt to buy around the 60-day moving average, which is generally a very good support for long-term formation, and this asset is showing strength, temporary strength against the overall market. So if you are an intraday trader looking for some kind of very quick setup, I definitely see here an attempt to spring, which could be followed by another test and then a rally, at least to this level. So this is the target for this kind of trade. This is the stop loss and this is the target. And I would be very curious to see how this short-term trade evolves for a simple reason. We have two structures right here, the trading range and this downtrend. Continuation of this rally to this target will definitely break this downtrend right here and confirm that a much wider structure is unfolding. And do you remember what was my original scenario that we have discussed in early January, just at the very beginning of this correction here? My idea is that we could have a prolonged trading range around this level where we try to break this structure and then we consolidate and go to the upside again. My original demand area for Solana was around $70, but I see that some demand is emerging here. This is not a high probability trade. Generally, you don't want to catch spring when the market is extremely overbought, but short term we could have at least an attempt to reach the midpoint of this bar. In terms of capital allocation, 20% Bitcoin and Ethereum short-term trades within the boundaries of the trading range, like you see here for Solana, but with a very small allocation, just 10% for mini quick trades. And last but not least, there is an additional 10% allocated to outperformers.